Hi, Bob with Keller Williams, Porter Ranch. So I wanted to talk to you a little bit about the market and what I see, what's going on. As you know, in 2008, I left credit risk and working for one of our large servicers. And one of the things I looked at was, non-performing assets, and as it grew, how we can cover the losses and do charge-offs and that sort of thing. And I also worked in asset management in REO, right? Hired agents across the country and did a bit of that. So one of the things that people wonder, since we're having multiple offers, is the market really changing? Well, the market is still hot. We are still seeing multiple offers. But what is actually happening? Now, this is really unusual to see rates have such a big increase, right? We saw a 3% rate increase in a matter of 3 to 4 months. And what I've learned is that cycles in real estate don't happen overnight. Everyone should be preparing for a potential storm, even if it doesn't happen, right? I can't tell you where we're going to be 6 months to a year from now, but there is definitely change in the market. One of the things that we've seen is, like, we have several phases, right? Phase one would be rate increases, but wait a minute, escrows are still closing. Why is that? Well, you got people locked in for 60 days while they're in escrow anyway. So when we start seeing these changes in February and March, it would take another 60 days to play out on the effects on interest rate increases. Well, as we saw big increases happen, what happens in March? All these buyers want to get on the market. Get their offers accepted, right? There's extreme excitement in the market, and that's because we see that, hey, there's concern. They want to get into a home, and shoot, I'm not going to get into a home. I'm going to be priced out. So then you got 30, 60 days of excitement, but then you have a portion of these buyers that are actually being moved to the sidelines. They're being priced out of the market, at least for what they want, because we haven't seen a decrease in prices. Not really in the market, although we are seeing price changes. But I can tell you for a fact that many sellers listed way higher above the market as well, right? So we have an excess excitement, phase two, right? Buyers pushing to buy. And then we see phase three, whereas mortgage apps now are way down, right? We're starting to see at least a tipping point where even refis are way down, mortgage apps are way down. What's happening? We see job loss, right? More jobs are actually being terminated on the lending side. So that's an interesting point that we're seeing happen in the market. Inventory. It takes time to build real estate inventory. And that's where we take a look at, supply and demand. Where are we going to be? Well, we don't have a huge supply on the real estate side, but all it takes is a little bit of tipping point, right? Buyers being put aside. We do have multiple offers, except that we don't have as much. We're not even close. So, keep that in mind, that, we had huge lines, the height of the market at open houses. And now we're seeing open houses with, maybe 15, 20, buyers walking through in a couple hour period. Well, we were seeing hundreds at some open houses, right? So huge interest. Now, every market is different. But I am seeing, like, vacation areas, vacation resorts, where I'm seeing tons of price reductions and properties sitting on the market. So we are going to see some investors that are going to take their assets and liquidate. They're going, okay, you know what? I think I'm going to take my money now. We are also seeing it in investor markets, vacation areas where there's Airbnb properties. We're going, okay, maybe there's too many Airbnb properties and not as many people traveling. Inflation is still relatively high, pretty darn high, right? Gas prices have increased, and so my take is that we'll probably see some more significant change in quarter four of this year, especially when we start hitting November, December, and specifically January and February of next year. So if you aren't preparing, my take would be like, put your money aside. Even if you're looking for investments, I think there'll be some great opportunities out there. I always think that buying, if you're going to live for long term, is a good buy, because we do see rents going up and not as many rental properties. So of course, not as many rental properties pushes more people to look and buy and get into the market. But we do have to hunker down, and especially if you're in the lending, if you're in title, if you're an agent, you're a broker, you should really be focusing, saving your reserves and really pushing on focusing on the market and building inventory, because that ultimately we are going to see, we are seeing some signs of shifts in the market, and maybe it's not affecting the pocket right now, but it will if you're not prepared. Have a great day. Bob at Keller Williams.